Hello and welcome to the channel. Today I'm going to take you through my 2023 investing plan. Okay, so this is my plan in a nutshell. I want to invest sensibly and regularly, and I want to hit that £1 million tax efficiently, and it all has to fit in with my life plan. So my life plan also includes other things such as overpaying the mortgage, paying into a pension, having investments in other asset classes. I've broken my specifically investing plan down for the stock market into 5 key sections. The first section is called inputs. So I want to make sure I've got a good job throughout the year, adding value and therefore earning good money. And that means that I want to pay a minimum of £300 a month into my investing account. I'll also look to add a proportion of any budget underspend. I do set quite conservative household and personal budgets. So underspends, part of that will go into my investing account at the end of the year, and it will be going into an ISA. I don't envisage I'll be putting a full £20,000 in for the year, so I don't think I'll use my full ISA allowance. So I should be able to put everything I invest into an ISA. Therefore, capital gains, dividends are tax free, and I get that tax protection. Generally speaking, very good advice to maximise your ISA allowance where possible. The second part of my plan is around the return. It's a very long-term investing plan that I've got, and I want to try and hit £1 million by in 2050 if I can. To do that, I need to have 9.6% per year compound annual growth rate. That's my sort of quicker target. My base target is to get 6.49% a year. That will get me there by 2060, but I certainly want the 9.6 to get there quicker. Now I've put do not eat there, and it's not perhaps what it seems. Do not eat means I don't want to do things that eat into my returns. An example of that will be paying high fees on a platform. Minimise things that eat into that return. Importantly, something I started doing properly last year, I will keep monitoring the run rates. As part of my portfolio updates that I share here, I will show what is my run rate that I need to hit those targets. And then when I'm making new investments, I will look at them in relation to the run rate I need to see whether they'll fit the bill or not. So thirdly, structure, very important to me. Very sort of structured person generally. And for my portfolio, something I started doing last year in a better way, I want to look at in the future is having a structure to my holdings. I want up to half of my holdings to be what I would call quality companies. Generally, they're the sort of Terry Smith type companies, and I've got criteria set for that. Up to, well, fifth to a quarter in dividend stocks. So that means even in a bad year, if the value of portfolio is going down, or I want to average in the market crash, I've got some income building up so I can do that better. And also a lot of long-term investment returns are from dividends. And then up 20 to 25% in managed by others, so index trackers and a couple of funds like Fundsmith. And the reason for that is that's my protection against failure. If I make bad choices, if I make ignorant choices, or I make mistakes, then this will help me out. And then 0 to 10% in cyclicals where the opportunity arises, such as I bought Shell during the market crash 2020 and then sold that last year. We'll continue to do a monthly portfolio review, post that on the channel so that you can see what I'm doing, and hopefully it will give you some ideas of do's and don'ts, the mistakes that I make, and also some of the good choices I make as well. The fourth key plank for my plan for 2023 is the less is more. I want to do fewer transactions. I got much better at this in the second half of 2022, but I was certainly too active in 2021, probably the first part of 2022. Fewer transactions should mean lower transactional costs, lower dealing costs, and also less worrying about when to buy and when to sell. I do want to do less selling in general. Those quality companies I should be able to hold for a very long period of time and not have to sell them. In most cases, because they've got low chance of failure and they invest into themselves well. The managed by others, again, shouldn't need to be selling that. Index trackers and a couple of funds. Dividend stocks, I'll buy them when they're very undervalued. So again, unless the story materially changes in those companies, I won't need to be selling, because selling and thinking about when to sell is one of the hardest things. So for me, it would just be probably the cyclicals I'll be actively looking to sell. I also want to watch less YouTube videos because I found in 2021 in particular, I made purchases, and a lot of that information, I was hearing so much positive things about certain companies by watching videos, sort of overweight reinforced a view that I had on certain companies, such as TTCF as an example, and made some bad investments off the back of that, which is my own fault. And only really therefore want to execute my best ideas. And it's not about finding the most ideas, it's just about finding a very, very small number of really good ideas, and those ones I will look to execute. So finally, simplification. So I did reasonably okay last year reducing the number of holdings of individual stocks. I want to keep doing that. And I have found benefits in terms of less reports to review, less looking at what's happening with the companies, more time, a clearer head. So I want to keep that going. And I do have some holdings that don't fit into that structure box at number 3. So I want to start getting rid of some of those, continue rather getting rid of some of those. Manage it all through ShareSite because I've got 4 different investment accounts, 3 different brokers, and ShareSite is a great tool for aggregating that together. If you want a 10% discount, check out the link in the description below. Really found that really useful looking at run rates as well. And then I've got my purchasing criteria, so if things are outside that criteria, I just won't even look at them. That dovetails with the structure as well. So that should keep things not much simpler. And if backfilling that against previous decisions I made, I would have avoided a lot of my bad decisions if I had this criteria in place and been very strict on it. So that's my plan for 2023. Please do comment below. I'd love to hear what your plan is for next year and whether this has helped you formulate your plan. And we'll be posting a video at some point in the next few weeks around the plan for this channel for 2023. I want to keep going, and certainly I'll be doing those portfolio updates for you. Thanks for watching and have a great rest of the week.